Hi guys, welcome to Leon Money Flow. My name is Leon, and on this channel, I bring you guys along my journey on reaching financial freedom, and hopefully, I can inspire some of you guys to take steps on your own journey too. Today, I want to share my investing journey, how I started at the age of 20, what I learned, and how starting early can really change your future. I'll also pull up a compound interest calculator, play with some numbers, and I'll show you the S&P 500 index, and then we can really see the power of starting early. I started investing back in 2020. Back then, I didn't know too much. I was mainly focused on growth stocks. I did have a few ETFs, but I was mainly chasing the hot companies and just hoping they would skyrocket. And while I definitely made some mistakes early on, I can't stress enough how glad I am that I started young. After all, investing is not about picking the lucky stock that gives you perfect returns, but rather it's more of giving time for money to grow. Now, at 25, I've been learning more and refining my strategy. I've been recently shifting my portfolio from more growth focused to a more income based portfolio. I'll go over more of that in future videos, but now let's just focus on why I started so early. So, what I want to show you guys here is that the earlier you start, the better, um, because the more time your money has for it to work for you. Okay, so let's give an example. Let's say you invest 500 a month. So that's 250 bi-weekly because most people get paid on a bi-weekly schedule, so I'll just put that. For interest rate, most people say the stock market returns 7 to 10% a year. So let's just go on the lower end and say 7. Okay. Interest is compounded and yearly. The time horizon, let's go 40 years. Let's say you start at 25 like me, and at age 65, you'll have 1.3 million. Wow. All right. So let's show something really crazy. So we're starting early and letting it go 40 years. Let's say you just start 10 years later, you start at 35. Calculate the same stuff. Boom. That's less than, well, that's basically half, or yeah. So you lose half the gains just by starting or pushing your start date 10 years later. Now, what if we do the upper bound, which is 10%? So let's do 10%, and let's do 40 years again. Let's calculate, and wow, that's 3 million. So you can see like compound interest is really great here. It's no wonder why Albert Einstein said compound interest is the eighth wonder of the world. Now, let's take a quick look at the S&P 500. So I did a Google search and it said, well, the top AI answers is 10 to 12% over the long term. That's sometimes not really trustworthy, so I just keep looking. And it looks like, Investopedia says S&P 500 returns since 1957 over 10%. So yeah, that's basically what we played with. But a really famous ETF that tracks the S&P 500 is VFV for Canadians, or Vanguard S&P 500. So actually, if you know Warren Buffett actually says that for most people, the best investment is just to hold a broad index fund, like a broad S&P 500 index fund. And actually, he holds a bunch of this ETF, the Vanguard ETF. He holds VOO because he's this is the American one, like in USD, but if it's listed on the Canadian Stock Exchange, it's also by Vanguard, but the ticker is VFV for, yeah. And if you just look at the performance here, it's pretty crazy looking. So if you look, the 1 year return, because we had a pretty good year, was 16%. 3 years is almost 20. 10 years is almost 14. So let's just plug that in our compound interest calculator. I'm curious, what if we said 14 here, right? And we calculate, wow, 9 million. So yeah, you can see, and this is only with us contributing 500 a month. So imagine we put more. What if we double it to 1,000? And let's just say, let's lower the interest rate. Let's see what it actually, well, let's just lower it to 10%. I know that it says since inception, when it started 2012. So since 2012, it's risen 17% per year. But let's just say 10% to be really conservative here. So let's do 10, and we'll calculate. And wow, it's 6 million. So yeah, that shows you how powerful compound interest can be. I was just rewatching my screen share segment, and I noticed that the compound interest calculator was slightly cut off at the bottom of the screen, but I'll make sure to link the calculator down below so that you can play around with it yourself. So where am I now? After starting with mainly growth stocks, I've been now transitioning to more income-focused investing. I hold things like high dividend stocks and covered call ETFs. It's pretty cool, as just the other week I got a dividend payment and it was a couple $100. My personal goal for the end of the year is to reach over $1,000 a month in passive income from my portfolio. I'll be breaking down my whole portfolio in future videos and explaining the risks and returns of the ETFs I hold. If you're in your 20s or even younger, now is the best time to start. Don't wait for the perfect opportunity. Just start small and be consistent. Future you will thank you. I remember seeing a quote on Instagram. It goes like, the best time to plant a tree might have been 5 years ago, but the next best time is today. Let me know in the comments down below, when did you start investing, or when do you plan to start? And as always, give this video a like and subscribe if you want to follow my journey to financial freedom, and maybe you can learn more about how you can start on your own. Thanks for watching. See you in the next video.